Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 29th of June 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. If you would like to learn more about Hurst cycles, then please make sure that you take a look at these resources that are presented on the screen at the moment. We have the 10 core concepts of Hurst cycles, which is a free download that many people have found very useful. We have many other introductory videos that you can find through our website, sentienttrader.com. If you enter your email into one of those boxes, we will send you some useful informational videos about Hurst cycles. Let's take a look at the markets, and this has been a very dramatic morning. I'm recording this video around about the middle of the day in Europe, and so the US markets haven't opened yet, but as you can see there has been a very strong downwards move, and here you can see today's bar. This is the before hours trading, I suppose you would call it, over here. For today, and of course this pen is playing games. There we go. So you can see that bar. The markets dropped very heavily this morning, and this provides a perfect opportunity for me to discuss what Hurst described as fundamental interaction. So I'm going to spend a bit of time speaking about that today. Fundamental interaction is when news events and things that happen in the world cause the markets to move with a great deal of volatility. They move very strongly. Usually when fundamental events occur, or when fundamental interaction occurs, usually the markets move in the direction that the cycles are pushing them anyway. And so fundamental interaction for a cycle trader is usually not a disaster. And in fact, the movement that occurred this morning was a movement that was entirely expected in terms of our cycle analysis. So we'll take a look at that. The sudden jump lower in stock markets was indeed expected because of the discussion that I've been having over the past few weeks, which has to do with the position of the 40-week cycle trough. Where is that 40-week cycle trough? So we'll speak a little bit about that today. Again, I'm not going to repeat myself, at least I'm going to try not to repeat myself and repeat everything I've said over the past few weeks, but you will know if you have been watching those videos that this is one of the analyses that I've been watching, which has a 20-week cycle trough over here at the beginning of February, an 80-day cycle trough over here around about the Easter weekend. I've been discussing this analysis for some months now, 3 months, and of course that expected the 40-week cycle trough to occur round about now. Here is the very staggered nest of lows, making this perhaps a slightly less favored analysis. When you see a staggered nest of lows like that, a nest of lows of course indicates the position for the next cycle trough of all of the cycles, in this case all of the cycles shorter than and equal to the 40-week cycle. When you see a staggered nest of lows, it is often an indication that the analysis is not very good, but not necessarily. It doesn't invalidate the analysis. It might simply mean that there's been a bit of uncertainty in the cycles, some strong variation in the cycle wavelengths, perhaps because of fundamental interaction, because of outside influences coming in and affecting prices. You might see a staggered nest of lows. So it doesn't invalidate it. But that nest of lows, as you can see, expects that the 40-week cycle trough should be forming around about now. And in last week's video, I spoke about the possibility that the trough that formed 2 weeks ago over here in the second week of June might be the 40-week cycle trough. Now, it is still possible that that 40-week cycle trough did form in the second week of June. And in some markets, it still looks very likely. But as you know, if you've been watching my videos over the past few weeks, there is another possibility, which is that the 40-week cycle trough is only going to occur in about the middle of July. Let's take a look at that analysis. And both of these possibilities are still valid. Let me just hide these. I wanted to speak about some FLDs and so on. Let me hide them for now. Here is the other analysis, which is certainly looking more appropriate or more likely in the S&P 500. There's the 20-week cycle trough, as opposed to the beginning of February. That's in about the middle of March, the 20-week cycle trough. Here is the 80-day cycle trough. Instead of occurring over the Easter weekend, that occurs at the beginning of May. And here is a very nice, neat nest of lows, as opposed to the staggered nest of lows that we saw in the other analysis. This is a very, very neat nest of lows. I like an analysis which shows a neat nest of lows. It doesn't necessarily mean that it is always the correct one, but in my experience, when you see a neat nest of lows, it means that the cycles are all working quite well according to this analysis. And you can see that the 40-week cycle trough is expected in about the middle of July. Now, this is a possibility that we've been aware of for some time. I wrote a blog post, must have been about 2 months ago, discussing the approaching 40-week cycle trough and when we could expect it. And I mentioned in that blog post that it would probably occur either in early June or in about the middle of July. So this has been a possibility we've been aware of for some time, and it's certainly looking fairly likely at the moment. Particularly with today's strong move down. Now, you can see that there have been 109 bars, 109 days since the 20-week cycle trough in early March. And, of course, the average length of a 20-week cycle is 136 days. And so that indicates that we expect the next 20-week cycle trough to occur in about 27 days. And here at the foot of the chart, you can see the bar count since the 18-month cycle trough in October. There have been 257 bars since that trough, and there are on average 274 bars in a 40-week cycle. And so here we're expecting about 17 bars, 17 days until the 40-week cycle trough occurs. So you can see that there are still a few weeks expected before the 40-week cycle trough occurs. Let's take a look at a few other interesting things on this chart. Well, let's quickly, seeing as we're counting bars, let's count the bars from this 80-day cycle trough. There have been 53 bars, 53 days since that 80-day cycle trough in the first week of May. 68 is the average length of an 80-day cycle, and so we are expecting another 15 days. So in other words, in about 2 weeks. So 2 to 3, maybe 4 weeks before the 40-week cycle trough, according to this analysis. And this is a very valid analysis. It looks very good to me. And so it looks as if though the 40-week cycle trough still lies ahead of us for the S&P 500. And that's quite important. I'm going to speak a little bit about commonality in this week's video as well. The principle of commonality states that markets, financial markets around the world, tend to move with a great deal in common. And what that basically means, when you get into the detail of it, it's one of Hurst's principles, and what it really means is that the markets not only move in a similar manner, but they tend to form troughs at about the same time. And so, for instance, this 18-month cycle trough back here in October was a very prominent trough, and probably a trough of 18-month magnitude in markets, in stock markets around the world. So troughs tend to form at about the same time because of the principle of commonality. And very often the magnitude of those troughs in the different markets is the same. Sometimes, however, you will find the magnitude is not quite the same. And so although troughs form at the same time in the markets, in some markets this might have been a trough of the 40-week cycle, perhaps, maybe even the 20-week cycle. So the magnitude of the troughs might differ from one market to the next, but the principle of commonality tells us that troughs tend to occur at the same time. I've been asked to have a look at some of the overview charts in Hurst signals to discuss commonality, so we'll do that in a moment. Nevertheless, as I was saying, in the S&P 500, it looks as if though the 40-week cycle trough still lies ahead of us. It is not impossible that the 40-week cycle trough did in fact form over there, and we've seen a very weak rise out of that. And let me just draw some shapes. If the 40-week cycle trough is behind us in the S&P 500, then that is a very, very bearish indication, because here is the M shape for the next longer cycle, which is the 18-month cycle, and so that would be the bearish shape. If the 40-week cycle trough did form over here, that would be what we would call, looking back with the benefit of hindsight, we would call that a straddled trough, and it has very bearish implications. So I'm not going to suggest yet that that is indeed what happened, but it is possible. But in the meantime, what is more likely is that the 40-week cycle trough still lies ahead of us in the S&P 500 and is expected to form in about 2 weeks' time, perhaps. Now let's take a look at some FLDs, because there's some interesting information to be gathered from these FLDs. First of all, let's take a look at the 20-day FLD. There we go. Now here's the 20-day FLD that, of course, we used to trade. I used to trade, and I trade the interaction between price and the FLD. So let's just zoom in and consider what this interaction would be. Here we go. As we have discussed several times over the past few weeks, there's the A category interaction following the 80-day cycle trough in the second week of May. Here is the B category interaction, which dropped down below the FLD. Usually between B and C category interactions, price tracks along that FLD. It dropped below it. What does that mean? What it means actually is that the market is beginning to see some increased bearish pressure. When the B category interaction drops down below the FLD, that indicates increased bearish pressure, which is of course what we have noticed in several of these markets, and I keep on discussing it. I won't repeat it in too much detail, but as you know, I have been expecting a major peak to occur in these markets, and I have been observing and pointing out bearish cracks that have appeared in the markets, and so an increased bearish pressure is certainly no surprise. The C category interaction would be this interaction here. Now usually the C category interaction jumps up above the FLD, and you can make a good long profit out of it. What happened here? Well, price came up to the FLD and touched it, climbed up above it, perhaps for a few hours. So that was a very disappointing C category interaction. What does that mean? Yet again, it indicates increased bearish pressure. And then, of course, our D category interaction is as price drops down below the FLD again, which it did over here, and comes down into the 40-day cycle trough. Okay, there's the 40-day cycle trough according to this analysis on the 9th of June, I think it was. And then, of course, we expect the E category interaction as price breaks up above the FLD. Now, over the past few weeks, I've been discussing this interaction. It was a very difficult interaction. We had an FLD spike over here, and price came up to the FLD. Price effectively tracked along that FLD for that Thursday, that Friday, over the weekend, Monday, Tuesday, Wednesday, Thursday, Friday. It kept tracking along the FLD, and then managed to, get a gasp of air up above the FLD last week. And so that was, according to this analysis, the E category interaction, a very messy E category interaction. What do I mean by messy? Well, it wasn't a clean price cross of the FLD, which I tend to talk about as being messy. However, many interactions are messy, particularly E category interactions. And if an E category interaction is messy, in other words, price tracks along the FLD instead of crossing cleanly above it, what does it mean? Again, it indicates increased bearish pressure. The longer cycles potentially are turning down, and instead of getting a good clean break up above the FLD, we have price tracking along the FLD, getting up above it for a few bars and then dropping down. So what is this interaction here? This interaction here, according to this analysis, is an F category short interaction. Of course, as it would happen, price came down and touched the FLD. According to this analysis, again, I must keep pointing that out. The FLD is very closely based on the analysis, of course. Price touched the FLD on Friday and found a little bit of support there, and then over the weekend plummeted down. Okay. Now, why did the markets plummet down? Well, that's a very interesting question. Why did the markets plunge down over the weekend? What happened? Well, if we turn to news events and ask that question of a fundamental analyst, then there's a very straightforward reason why markets plummeted. Here is Bloomberg's headline for today, one of their headlines: Greece's disastrous weekend in 5 charts. And if we have a look at the sort of the main message here, you can see it says that stock markets sank in Europe. Okay, that is the effect. If you're talking about, what was the cause of the markets moving down, we've been looking at the U.S. markets, and this says stock markets sank in Europe, but of course they also sank in the U.S. because of the principle of commonality. Markets tend to move together to a greater extent, greater or lesser extent, but largely a greater extent. So stock markets sank in Europe. That was the effect. What was the cause? Well, as you can see, the cause here, the media always provide a cause for any effect. So the effect was stock markets falling. Media always provide a cause, which is that the European Central Bank capped its lifeline to Greek banks. And further to that, the government in Athens responded by introducing capital controls. So those two things in brackets: the European Central Bank capping its lifeline to Greek banks, and the Greek government's response by introducing capital controls. Those were the cause for the effect, which is stock markets sinking in Europe. Now, if you've been watching my videos for any time or reading any of my material, you will know that I believe that fundamental news events do not cause markets to move. Yes, you do occasionally get fundamental interaction, which is where a news event will cause increased volatility in the market, and you get a very strong move, usually a very strong move which is immediately corrected. In other words, the market bounces very strongly in one direction and then it bounces straight back again. And Hurst noticed this and called this fundamental interaction. The important thing as a Hurst cycles trader is that fundamental news events don't cause markets to move. The media would have you believe that the markets moved this morning because of what the European Central Bank did, and the way in which the Greek government responded. But that, in my opinion, is not the cause of the markets sinking. It is certainly the cause of the volatility that we have seen. And in fact, let's take a look at a European market, and let's take a look at the Euro stocks, a market that I don't really look at in these videos very much. Here is the Euro stocks, which is a chart that the Bloomberg article that I'm looking at actually shows us. So I'm going to refer to that. It makes a useful comparison. Here you can see nothing particularly unusual about this analysis. According to this analysis in Sentient Trader, you can see I haven't pinned any of these troughs. This is a default analysis out of the box performed by Sentient Trader. You can see that Sentient Trader believes that the 40-week cycle trough did in fact occur here in the middle of June for the Euro Stocks Index. And so what was the sudden dramatic price move that occurred this morning? Well, if we look at our sequence of interaction between price and FLD, and I can zoom right in and take a look at that, you can see that here is the A category interaction, which occurred last week as price bounced out of the 40-week cycle trough. That is according to this analysis. It might be wrong, of course, but then we expect price to come down to the FLD in a B category interaction. So this should be a B category interaction in the Euro Stocks Index, and what do we expect? We expect then price to track along the FLD and bounce back up again in a C category interaction. Of course, we don't know what's going to happen here, but you can see that price, this bar jumped all the way down here and opened down right down at this level, experienced a low price round about the level of the previous low price, and it has so far today bounced all the way back up to the FLD. So this is in the Euro stocks. As a matter of interest, if you take a look at this chart that is presented in the Bloomberg article, there is a chart here which I think you need to be very careful looking at charts that are presented in news articles, because they can be deceptively meaningless, in my opinion. I'm going to explain why I think this is a fairly meaningless chart. This is a chart that starts at 3 a.m. Presumably that's Eastern time. Yes, I think that's Eastern time. There we go. Oh, I've drawn over it. Eastern time, so that's time in the United States for the European stock market. So it obviously opens at 3 o'clock in the morning there. And here you can see the price action through Friday. You can see a bit of a sort of a rising price action, and here is the dramatic drop down. Now, the journalist who wrote this article has chosen this chart because it shows a tremendously dramatic drop down, and it makes their point that the markets in Europe fell. Well, that's interesting, but personally I think it's a fairly misleading chart. I don't think you can really glean anything from that. Yes, the markets fell, but isn't it so much more informative to take a look at a chart like this, which presents us with a little bit of context? Okay, I find it much more useful looking at a chart where I can see what the cycles have been doing, and I can see some good, nice M shapes for what the cycles have been doing. That's not quite the correct M shape there, but nevertheless, I think it's useful to see it within the context of a cycles analysis, obviously, because I'm a cycles analyst. But the drop down today below the FLD, if I'd been trading at the open of the European market, which I, by the way, never do on a Monday morning, because you get a lot of volatility often on a Monday morning, price dropped way down there, and all it has done is bounce back to the FLD, which is pretty much exactly what a cycle analyst would expect, is that the price will bounce back to the FLD. I think that this morning's move was an example of fundamental interaction. And what that means is that there was a big news event. Yes, there's no denying that what's happening with Greece and Greece potentially exiting from the euro, it's very big news, and of course it is going to impact the markets. The markets are not immune to what happens in the world. When there are big news events, they will react. But what is important, I believe, I should say, in my opinion, what is important is that the markets, at least the news events, do not move the markets in terms of changing their direction. News events cause strong volatility, and that volatility usually moves in the direction in which you expect the markets to move because of the cycles. And let's just go through some Hurst signals charts as a matter of interest to discuss what we were expecting the markets to do. Here is the Hurst signals chart for the S&P 500. You can see that according to the Hurst signals chart, and of course this is a different analysis, and I'm not going to dwell on that too much, but you can see here that according to this analysis, the current interaction is a D category interaction. So we are in a short trade. So when we get a sudden volatility, which way do we expect it to be? Well, according to this, we expect it to be to the downside. Okay, so that is exactly what happened. That's in the S&P 500. Let's take a look at the Nasdaq. Now, the Nasdaq on Hurst signals is indicating the 40-week cycle trough also formed here in the second week of June, and it is indicating that that was the B and C category interaction, and the current interaction, as you can see, is also a D category interaction, where we expect price to come down to form the 40-day cycle trough. The 40-day cycle trough, which is expected sometime next week, roughly. Okay, so here, let's have a look at the Dow Jones. Here's the Dow Jones. The Dow Jones analysis indicates that the 40-week cycle trough still lies ahead of us, and what was this interaction, the current interaction, is a category F interaction. It hasn't been labeled because it hasn't been identified yet, but the current interaction is most likely an F category interaction. What do we expect? We expect price to go down for the F category interaction. Therefore, when there is fundamental interaction, when a big news event happens, which way do we expect the markets to move? We expect them to move downwards. Okay, so now let's sort of get back on track, having discussed fundamental interaction at some length. So what is happening in this market, or these markets? What is going on? Well, we still have two possibilities. And so here they are in the, let me just zoom out again so that we can sort of summarize a little bit what's going on here. We have two possibilities, in my opinion. The one possibility is that the 40-week cycle trough, which was expected to form possibly in early June, has formed in some markets perhaps, or maybe in all markets. It did form in the beginning of June, and all that we've seen since then is price really struggling to bounce out of that 40-week cycle trough, which has very bearish implications. So that's the first possibility, and that is this analysis that we see presented on this chart. The other possibility is that the 40-week cycle trough still lies ahead of us, and we've got about another 2 weeks roughly of downward price movement, where price will come down, form the 40-week cycle trough, and then bounce up again. In my personal opinion, that looks a little more likely to me, but we'll have to see how the markets play out. Now, I started looking at FLDs, and we discussed the 20-day FLD, and let's just zoom in, and of course that was an F category interaction, which happened here on Friday. That's F category interaction. And so what's going to happen next? We would expect price to come back up to the FLD and then fall down again. So we're looking out for a GH category interaction in this scenario, after which, of course, price will bounce out of the 40-week cycle trough. That's what we're expecting here. Now, there was another very important FLD interaction that happened today, which is an interaction with the 40-week cycle FLD. Now, I wrote about the 40-week cycle FLD in a blog post about 2 months ago, I think, or perhaps a little less, 6 weeks, something like that. And it's a very important FLD because you can see the FLD has providing support to the market. Look at how the market came down in December of last year, touched the 40-week FLD, bounced up again. Look at this series of interactions with the 40-week FLD in January of this year. Again, price came down, found support at the level of the 40-week FLD at the beginning of April. It dropped down and found support twice in May. You can see price keeps coming back to the level of the 40-week FLD and finding support there. The important thing is what's going to happen the next time the price comes down to that 40-week cycle FLD. And I don't know if you can see it, but that is exactly what happened today. Price has come down to the level of the 40-week FLD. What do we expect? Is the 40-week cycle FLD going to provide support again for price? Well, the first thing I expect is when price interacts with any FLD, but particularly with a longer cycle FLD, price always encounters some form of support, or resistance, of course, but in this case, because it's coming from above, it's going to find some support at the level of the 40-week FLD. That's very important. It's very rare that price entirely ignores an FLD and simply just goes straight through it. That's very rare. Even if you have a look over here in October, and let me just make this point by zooming in. Here you go. If you have a look in great detail at when price met the 40-week FLD, and I'll just draw over it, there it is. Back in October of last year, you can see it came up to the level of the FLD, found resistance, tried again, found resistance, and then finally bounced up again. Okay, so that was a period of 4 days in which price sort of struggled to get through the FLD. So the first thing I expect whenever price approaches an FLD is I do expect price to find some support there. Okay, because all FLDs are important, meaningful levels for the market. So you can see price came down, dropped just below the FLD, and has bounced back up again. This is the S&P 500 we're still looking at. And so it has definitely found some support at the level of the FLD. But what do I expect? Let's say price does track along this FLD for a few days, let's say 4 days as it did in October of last year. Which way do I expect it to go? Do I expect it to resolve above or below the FLD? Now, I expect it to resolve, not revolve, I expect it to resolve below the 40-week FLD. And let me not waste too much time in this video explaining why. Go and take a look at that blog post about the 40-week FLD, and you'll see a long discussion there about why I expect price to resolve below the 40-week FLD in the next sort of big interaction with that FLD. Of course, the 40-week FLD is a very long cycle FLD, 9 months in length, and so it could well spend some time fiddling around, go up above it maybe before it finally comes down below it. But I certainly expect it to resolve below it when we're looking not just over the next few days or the next few weeks even, but over the next few months. I expect it to come below the FLD, and as a matter of interest remain below that FLD all the way down to the next 18-month cycle trough. Now that 18-month cycle trough is where is that? Let's just zoom out a bit and go and have a look. There we go. There's that 18-month cycle trough in about, what's that, April of 2016. So I expect price to resolve below the 40-week cycle FLD, and it might spend some time fiddling around trying to get below it, but once it does resolve below it, I expect it to remain below that 40-week FLD all the way through to April of 2016. So we're looking at a fairly significant event here, and something that has an impact for many months. Okay, so that's that. Now, speaking of the April 2016 trough of 18-month magnitude, I've been asked to speak a little bit about the principle of commonality. We've touched on it a little bit already today, but in particular speak about it in connection with the overview charts from Hurst signals. So let's quickly do that. I'm going to try to explain how the principle of commonality works and what it leads us to expect from the markets. The principle of commonality, as I've already mentioned in today's video, states that markets move with a great deal in common. And what that means when you break it down is that troughs tend to occur at around about the same time in markets around the world. However, they aren't necessarily always the same troughs, because markets are different. Okay, the markets in Europe are different to the markets in America because of different economies, and so forth. So you will often get a trough occurring at about the same time, and sometimes it is the same magnitude trough, but at other times it's a different magnitude trough. So here are some overview charts where you can see this principle in practice. Now here is the trough of October of last year, October 2014, which, as you can see, because of these yellow semicircles, is a trough of 18-month magnitude. Looking ahead, the next 18-month cycle trough is this nest of lows, which is tiny, of course, but the overview chart is just meant to give us a very rough indication, and this tells us to expect an 18-month cycle trough to occur round about looks like round about April in 2016, which is of course what we've just seen on my chart in Sentient Trader. So we're looking at an 18-month cycle trough occurring in April of 2016. We're then also expecting a 54-month cycle trough to occur, and it should occur synchronously with the next 18-month cycle trough. So that's somewhere over here. So that's the 54-month cycle trough. And that's expected to occur, let's say, roughly mid-2017. So that's looking at that overview chart. Now let's take a look at the overview chart for the NASDAQ. Now you can see there are very similar things happening in this chart. Here is an 18-month cycle trough, which also occurred in October of 2014. Okay, principle of commonality, troughs occurring at the same time, and in this case they are the same magnitude trough. When do we expect the next 18-month cycle trough? Well, here it is here. There's the semicircle coming down in April of 2016. And here is the 54-month and the 18-month in about mid 2017, indicating the expected time for the 54-month cycle trough. So the principle of commonality is very clear and simple between the S&P 500 and the NASDAQ. We are expecting the same things to happen. All right, we're expecting an 18-month cycle trough to occur in April of 2016 and a 54-month cycle trough to occur in mid-2017. So far, there's absolutely no difference. But now here's a chart with a difference. Here's the overview of the Dow Jones Industrial Average, the YM futures. And so here we begin to see some differences. First of all, a similarity. Here is an 18-month cycle trough which occurred in October of 2014. We also had an 18-month cycle trough that occurred in the NASDAQ and in the S&P 500. Nothing different here. However, the position of the 54-month cycle trough is different, because here we have a nest of lows for a 54-month cycle trough, which you can see is centered round about April of 2016. It's a bit of a staggered nest of lows, but around about April of 2016 we're expecting a trough of 54-month magnitude to occur. Now the important thing here, in my opinion, is that this doesn't necessarily mean that a 54-month cycle trough, 4.5-year cycle trough, is going to form in the Dow, while an 18-month cycle trough occurs in the S&P 500. The important thing, in my opinion, is because of the principle of commonality, we know that troughs occur at the same time. They might not be the same magnitude, but at about the same time, we are expecting a trough in the Dow. It might be a trough of 54-month magnitude, but in the S&P 500 and the NASDAQ, it is expected to be of only 18-month magnitude. It is possible that the trough that forms, and we expect troughs at about the same time in all of these markets, it might be that the trough that forms is going to be a 54-month cycle trough in the Dow and an 18-month cycle trough in the NASDAQ and the S&P 500. However, in my opinion, those longer cycle troughs, 18 months and longer, tend to occur at the same time. So what that means is that the long-term analysis in these charts is probably more correct in the Dow or in the S&P 500. Okay? Why don't we tweak the details and make everything exactly the same? Because trying to make all your analyses exactly the same is missing the point, in my opinion. I think it's useful to see the different analyses, knowing that we cannot be 100% certain that one analysis is correct and the other analysis is incorrect. It's impossible to be 100% certain. I wish I could be, but it is impossible. Both of these analyses are viable and very valid, and both of them need to be kept in mind. The important thing is that we are expecting a big trough in April of next year, okay? And yes, markets are expected to fall into that trough, because when you're expecting a trough to occur, obviously prices are expected to decline into that trough. So that's the information that we're working with. When we get to April of 2016, I hope that you will still be watching my videos and that I will still be making them, and then we will discuss the magnitude of that trough. And we'll say, is this an 18-month cycle trough or is it a 54-month cycle trough? Both of those possibilities are present. Both of them are possible. Let's quickly take a look at one more overview chart to discuss the same thing. Here we go. This chart also has an 18-month cycle trough that also occurred in October of 2014. Can you see how the principle of commonality played out? And we had an 18-month cycle trough that formed in stock markets around the world. The European markets and the American markets formed an 18-month cycle trough in October of 2014. What does this analysis tell us to expect? It tells us to expect a 54-month cycle trough, and of course, synchronously, an 18-month cycle trough in probably about March of 2016. So yes, here as well, we are expecting price at some point, to drop down into an 18-month cycle trough early next year, early 2016. Okay, so that interaction, so that's a little digression in terms of commonality and a slightly longer term picture. But the important point, coming back to the immediate picture, the important point is that price is currently, right now, today, interacting with the 40-week cycle FLD, and that's a very important thing. I expect it to resolve to the downside. So here's an analysis in the S&P 500 showing that the 40-week cycle trough still lies ahead of us. Let's take a look at the NASDAQ quickly. And you can see the NASDAQ is showing us an analysis where the 40-week cycle trough did occur at the beginning of June. Now, the NASDAQ has been generally more bullish than both the Dow and the S&P 500. There's been a little more sort of bullish pressure. So it's certainly possible that the NASDAQ has a slightly different analysis to the analysis in the Dow Jones and the S&P 500. You can see that in the NASDAQ this morning we also witnessed a big drop down. So it certainly wasn't only the European markets that dropped this morning. The US markets also dropped. And you can see that drop down occurred about 20 bars after the potential 40-week cycle trough that formed at the beginning of June. So it is quite possible that that 40-week cycle trough did occur in the NASDAQ. And perhaps it hasn't occurred yet in the S&P 500. That is possible. The principle of commonality is a guideline. We expect troughs to occur at the same time, but they don't always. Sometimes the 40-week cycle trough in one instrument will occur at the last 40-day cycle trough or 20-day cycle trough preceding the 40-week cycle trough in another instrument. That is very possible, and that might have happened. So this analysis is telling us that this is still the trough of the 40-week cycle here in the beginning of June, and we've seen 20 days since that elapsed, so it's about time for a 20-day cycle trough to form. And so in terms of our interactions, we're looking at what happened last week as a B category interaction, but a very bearish B category interaction. Now, while we're looking at this chart, let me just highlight some of the dangers that this chart presents to us. If this is the correct position for the 40-week cycle trough, and that's by no means a given, but if that is correct, then we have an evolving M-shaped cycle for the NASDAQ, which looks a little bit like this. Now, we expect the M shape to be roughly symmetrical, so I tend to always draw a symmetrical M shape because M shapes are often symmetrical, and sometimes they start out being symmetrical. If that is the trough of the 40-week cycle, then potentially that is a very big warning sign that we are going to see strong downwards movement, after now, or any time from now, through to the next trough of the 18-month cycle, which is of course March, April next year. So that's a bit of a warning sign to bear in mind if this analysis turns out to be true. Here's an analysis in the Dow. Now the analysis in the Dow, as I've spoken about, you can see the same interactions with the FLDs there. Let's not waste more time on that. The analysis in the Dow, I should say, is the default analysis that Sentient Trader has performed, looking very similar to the DAX. There's the 20-week cycle trough at the beginning of February. Here's the 80-day cycle trough at the beginning of May. And here is a very neat nest of lows, indicating that the 40-week cycle trough is expected around about the second week of July, and so you can see we've got about 2 to 3 weeks to go before that 40-week cycle trough. This analysis looks very good to me, which is why I am expecting the 40-week cycle trough still lies ahead of us. I keep in the back of my mind the possibility that the Nasdaq and the DAX, as you'll see in a minute, might have formed their 40-week cycle troughs 2 weeks ago, but more likely, in my opinion, is that the 40-week cycle trough lies ahead of us. So let's take a look at the DAX, and here is the DAX. Right, so there is the 20-week cycle trough over there. Here is the 80-day cycle trough over here. This trough in early June was then probably the trough of the 40-day cycle in the DAX, and prices now coming down and dropped down below it. That's of course an F category interaction as price comes down below it. And here you can see a slightly staggered but nevertheless valid nest of lows, also indicating roughly middle of July. So it's going to be very interesting to see how these markets play out. I've been anticipating this 40-week cycle trough for some time, as you know, discussing whether it might have formed in June, might be going to form in June or July. Certainly it looks to me as if though the scales have tipped in favor of the 40-week cycle trough forming in the middle of July. Let's take a look at the euro, and let me quickly go back to that article in Bloomberg, or on Bloomberg, about Greece's disastrous weekend. And of course, one of the things that Greece's disastrous weekend definitely would be expected to do would be to cause the euro-US dollar to drop. So here is the euro to US dollar in this article. Again, in my opinion, a slightly misleading chart. There's the big drop. Yes, it's a really big drop when you look at that chart. Was it entirely unexpected? Well, in my opinion, it wasn't unexpected at all. It was, in fact, exactly what I was expecting. And if you go and take a look at last week's video, you can see that I was expecting it, because here is the analysis in the euro to US dollar. And I discussed it in last week's video. We're seeing very good, clean cycle shapes here. And here is the last 80-day cycle trough in the last week of May. Here's our A category interaction, which was a great interaction, achieved its target, slightly surpassed it. Here was the B category interaction, which I discussed in last week's video. The C category interaction, I even discussed how we could have entered into that C category long trade using the 10-day FLD in last week's video, and how it achieved its target. I think it achieved its target very accurately. And of course, the next interaction that I was speaking about last week was the D category interaction. And what is that? That is when price crosses down below the FLD and drops down into the 40-day cycle trough. There's the nest of lows for the 40-day cycle trough. You can see that nest of lows indicates that the 40-day cycle trough is expected to form this week. Okay, and let's very roughly, let's just clear that and let's zoom in a bit, and let's calculate some targets for that 40-day cycle trough, or at least for the D category interaction. Here is the D category interaction. That is the crossing point. It happened very clearly on Tuesday of last week. Notice how even on Tuesday of last week and on Wednesday, price came back to the FLD. Brings me back to the point about how FLDs are such important lines. Even when price crosses an FLD, it will often return to that level. Okay, so that would have been our crossing point, and of course also our entry point for this D category short trade. This is our initial stop loss, also of course the pivot point, some people would call it. And I often just count grid lines. It turns out to be the easiest way of doing things. So that's 1 grid line, 2, 3, perhaps 4. So we go down 1, 2, 3, 4. So we're looking at roughly a target of about 110. So that would have been our T2 target. So price came down to that level today. Was that unexpected? No, not at all. It's very interesting. I've been receiving some emails recently from people asking how safe is the euro. People who are making investments in the euro, and they're asking how safe is the euro with Greece exiting the euro. If Greece exits the euro, does that mean that's the end of the euro? Should we take all our money out of the euro? Should we not have money in the euro anymore? Well, first of all, I'm not qualified to answer any of those questions. I don't know how safe the euro is at all. I'm not an economist, and I'm not trained to give advice about whether the euro is going to survive. But I will say one thing about the euro, which is that it has been exhibiting very clear cycle shapes for a good long time. And if you take a look at the videos I've been recording over the past several months, you'll see that all of these cycle shapes are very good, clear, clean cycle shapes. There are all the M cycle shapes, and it continues to exhibit good, clean cycle shapes. And while a market or an instrument is exhibiting good, clean cycle shapes, it indicates, in my opinion, that instrument is still healthy. It's a healthy market. It's responding to the pressures of the cycles. When a market stops exhibiting good, clean cycle shapes, that's the time to be very careful of it. Such as a matter of interest, the Swiss franc stopped doing. I found the Swiss franc impossible to trade last year, and of course the reason for that was because it was being held. It was fixed against the euro by the Swiss banks, and it made it impossible to trade. When cycles stop working in the markets, that, in my opinion, is a time to be distrustful of the market and to stay out of it. I don't know what's going to happen to the euro, and I cannot give you advice in terms of whether it's going to survive the Greece situation or not. But I can tell you that the cycles look very good, and certainly that's what I trade. Thank you very much for joining me in the Hurst trading room this week. I do hope that you found the video useful. It's been a long video, and I apologize for that. I had so much to say, and I seem to have gone off in many different directions. I hope it hasn't been too scattered and too all over the place. Very interesting times in the markets, and a very good time, in my opinion, to be a cycle trader, because the cycles are working very well. So thank you very much for joining me. I look forward to seeing you next time, and I wish you profitable trading.